What's going on, guys? Today we are talking about JEPQ. All right, what is it? So we hear a lot about other of these income ETFs like QYLD, JEPI, or JEPI, right? But what is JEPQ? No one's really talking about it, which I find fascinating, and probably because the chart doesn't look that great. But there's a reason, so we're going to dive in and talk about what's going on with this new super high dividend yielding ETF. All right, so for those who've actually looked into JEPQ, a lot of people say, well, I don't want to get into a fund that's just hemorrhaging money to pay me out a big dividend. And look, I agree with you. There's a reason why I'm not really very bullish on QYLD. Like, I'm not the biggest fan of these funds that sell in-the-money call options to guarantee a payout while basically guaranteeing that their stock price over time will go down. I'm not about that. And no shame on QYLD either. Like, if you're retiring and you want to make income that way, that's great. But I like stuff with an upside that is paying me a dividend because I hope to grow my wealth, not just get it in payments. So why are we looking at JEPQ when the chart is down 16% since it started, right? This isn't even 1 year old yet, and it's down 16% in its inaugural season. That is terrible, right? Terrible. But we're going to take a look at kind of what goes on with this fund anyway, and then what are they holding, and maybe if we can see like some of the reasons why this looks so bad. The deeper you look into it, the more I actually like it. And we'll get into that in a second. So we're going to jump into Seeking Alpha. We're going to look at the chart. We're going to look at some dividend payouts, and then we'll dive into it a little deeper. All right, so here in Seeking Alpha, we can see JEPQ. This is JP Morgan's NASDAQ Equity Premium Income ETF. It is a mouthful and a half, all right? So, yeah, JEPQ it is. Now, one of the things that I find interesting is when I look over on the right side of the screen, only 4,870 people are following this. So this is not something that's gotten a lot of attention. Just for frame of reference, if I go over to like Microsoft, there's 1.07 million people following it. If I go, let's open a new window right here. If I search like JEPI, for example, this is the one that most people talk about. JEPI has 29.23 thousand followers. So, we're really not that many people are looking into JEPQ right now. Most of those people are getting into JEPI and QYLD and stuff like that. I guess I'll leave that open for now. But here is the chart. So as I said, this fund is not even a year old. We can see that the chart starts on May 4th. May the 4th be with you, of 2022. Sorry, guys. That was May the 4th be with you. Buy some JEPQ. I'm not a wealth manager, credit counselor, or financial advisor, by the way. This is just for entertainment, but May the 4th be with you. God, I'm an idiot. Anywho, so it hit the market at $51.09. All right, so that's where it started. $51.09. Now, as we follow it for the year chart, again, it hasn't been a year yet. We are currently down 16.23%. And that's not even a full year, guys. That is like 10 months. So not great. But their dividends have been great. So they're currently at a 11% dividend yield this year, and it hasn't completed a full year. So let's look at this side, right? Now it dropped all the way down even to 39.61. So it bounced back from there, which is good. But now, it does have a 0.35% expense ratio. That's money that they take for managing the fund. It is a little on the higher side, but it's on the lower side of funds that are actively managed, selling covered call options and paying you these big incomes. So I'm okay with that. But the dividend frequency is monthly. All right. I want to stress that every month they're cutting you a check. If you set that up in a drip portfolio or a dividend reinvestment plan, you can start accruing shares of this pretty quickly because that monthly dividend payout. And their dividends are grand. So far, again, it hasn't been a full year yet. They've paid $4.73 per share, which is right here, trailing 12 months of 11.04%. And they still have 2 months to go. So that's incredible. I love that. Really, really cool to see just somebody who's just cranking out payments. Now we just have to see them stable out this chart. So I'm looking forward to that. If you look at this at a 6-month chart, it doesn't look terrible. If you look at it year to date, it looks fantastic. So, a lot of this is not going to be necessarily the management of the fund, but it's going to be what's in their holdings. All right. So something really bad happened with their holdings. So let's take a look there. And in order to do that, we're going to do my favorite thing is just go straight to the fund's website. So this right here, this is on JP Morgan Asset Management's website. This is for JEPQ, the NASDAQ Income Premium Equity. I can't even say it. NASDAQ Equity Premium Income ETF. They got to start naming these things better. Anywho, so we have our pricing information and all that, yada, yada. Really, what I want to see here is the first thing. What is this fund and how does it work? What's the purpose of this thing? So it was designed to provide current income while maintaining prospects for capital appreciation. So they're looking at this fund as a potential growth fund, okay? It's a growth fund with massive dividends, and that is mind-blowing to me because it is tanking, and how is somebody going to pay like 12, 13% dividends in a growth fund? It's nuts. So I love to see that. I can't wait until it actually does this. I hope that it does do this. It's too new to tell, but it looks like that's their goal. They're going to have a growth fund, right? It's just nuts. Anywho, so the fund generates income through a combination of selling options and investing in U.S. large cap growth stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. Okay, so they're banking on dividend payouts just like we are in our portfolios, but they're also selling covered calls on that. And we'll get into what a covered call is in a minute. They seek to deliver a significant portion of the returns associated with the NASDAQ 100 index, but with less volatility. That's going to come from those covered calls. And then constructs a long equity portfolio through a proprietary data science-driven investment approach designed to drive portfolio allocations while maximizing risk-adjusted expected returns. Again, this sounds like a fancy way to say we do covered calls. I will kind of... well, actually, this is important. Underlying equity portfolio. This is their investment process. Applied data sciences, utilizing 40 years of JP Morgan, create a fundamental framework for security selection and portfolio construction. Basically, they say this like a bunch of dudes are sitting in a boiler room and they're going to pick stocks. All right? That's what that means. Options overlay. 1 month out of the money call options designed to generate income and give investors a portion of the upside with reduced volatility. Okay, that's a really big deal. The out of the money call options that they are selling mean that they're just trying to collect income as the stocks go up. That's a good thing, right? What you don't want to see, or at least what I don't want to see, is in the money call options. And again, we'll get into call options in a second for those who know what I'm talking about. If you have a in the money call option, it means that they're going to have to sell off a bunch of shares every month. If you have an out of the money call option, it means you might not have to sell off all those shares, and you might still get some income from selling the option contract. And those two things together equal JEPQ, a well-represented, fundamentally driven NASDAQ 100 strategy that seeks to provide clients with monthly distributable income via options, premium, and dividends. So that's basically what they're saying, all right? Profile managers, these are the guys, all these guys have less than 1 year managing the fund because it's not been around more than 1 year. At least you have a veteran guy on there who's been there for 36 years. And Hamilton Reiner, I feel like he's on the JEPI team too. Yeah, he's on the JEPI team, which is JP Morgan Equity Premium Income ETF. So this guy is one of the guys behind JEPI, which is kind of cool. So if you're a fan of JEPI, and you're looking to diversify, this is the same guy doing JEPQ. But anyway, we'll get out of that. It's bad when you start recognizing like people's LinkedIn photos on JP Morgan's website. And moving on, so taking a good look at what's in their actual portfolio, I think is very important. Okay. So here's their sector exposure. This means what percent of the fund belongs to which industry, right? So communication services, those make up 12.3. Consumer discretionary makes up 12.8. And I question that, and we'll get to that in a second. Consumer staples, 4.07. Energy, 0.3. Financials, 2.4, healthcare, 5.6, industrials, 3.3, IT, 40.1%. Okay, that's so much in one category. It's almost like it's a technology ETF. It feels like that now. NA, negative 9%. Don't know what that means. Other, 17.2%. And then we got some real estate and utilities. So, I mean, guys, half of this fund, or almost half of this fund, is tech stocks. And I think it's more than 40% because I don't believe this consumer discretionary number is not also tech stock. And here is why. So, this right here is a list of, as of March 3rd, of everything that they hold, every asset and every stock and all that, right? So the biggest thing in their portfolio, and I'm sorry because this is going to be a little small. I've blown this up 275%. You can see it up here. I'm trying my best. But Microsoft is the biggest holding that they have. If you come all the way across, it makes up 9.87% of their entire portfolio. So basically, pretty much 10% of whatever your investment in JP Morgan NASDAQ Equity Premium Income ETF, 10% of what you put in is Microsoft stock. Okay? Which is crazy. That's a lot to have something like that. And then the second one is not much better. Apple stock, right? That's number 2. That makes up 9.09%. The next one, Alphabet Inc. For those who don't know, that's Google. Okay? So Google makes up 5.9. And here's where this whole chart thing gets interesting, right? Remember how over here, communication services was 12.3? Well, look at how they index Google. They consider Google a communication services, right? So right off the rip, that 40% of JEPQ, which is technology, in my opinion, just jumped to 46%, right? Because here comes Google, right? Amazon.com is the 4th biggest. They're listing that as consumer discretionary, not technology. Who needs the biggest servers in the world, right? That's not IT, I promise, right? But they're calling that consumer discretionary. That's another 5.11%. So again, that 40% just jumped from 40% to 46 to now 51. Now this half of this fund in, we haven't even scrolled through it, is basically tech, right? It's basically a tech stock fund, right? And I'll just run through the list, right? So we have NVIDIA. If you don't know NVIDIA, they make like really high-end computing components and stuff like that. They make chips, semiconductors, stuff like that. We have Tesla, okay? Tesla's listed as consumer discretionary, which I guess I kind of agree with that. Meta, that's Facebook, that's Instagram, right? They're listed here as communication services. So that's another one that's dumping into the pile. We have Cisco, AMD, they're another like semiconductor company. Analog Devices, semiconductors, a lot of semiconductors. Comcast, right? Booking Holdings, this is like if you're booking a trip on the internet, that's where it is. And that's also listed as consumer discretionary. I don't know what Synopsys Inc. Common is. I don't know what that is. Intuit, the like TurboTax and all that. Netflix, Broadcom, Qualcomm. I don't know what Regeneron is. A healthcare company of sorts. I don't know. It makes up almost 1%, but I don't know what Regeneron is. Costco Wholesale Group. This is truly consumer staple. All right, so this is like a real consumer staple thing, which is good. Mondelez International. Again, I'm not really sure what that is. Texas Instruments. I remember. Do they still use like T89s in high school? Like that was a big deal. You had to buy a T89. Completely useless later on in life. Like I've never been like, oh, let me grab my TI-89 so I can run a quadratic equation on the calculator. Completely useless information. So not that math is bad, by the way. I don't know why we're not using laptops. PayPal, and there's a lot more. Oh, Pepsi, we have that. T-Mobile, right? Not AT&T for those who watch my videos. This is the actual T-Mobile. And then it's a big list. They have 87 different holdings that I don't want to go through them all, but those first like 20 of them, I mean, they're all over 1% of the company. And with between Microsoft, Apple, Google, and Amazon, those making up about 30% of the portfolio, just those three, is, in my opinion, why I'm going to call this thing a tech stock dividend income ETF, right? That's really what it is, at least in my opinion. And it explains why it's tanking, okay? Because now I can look over at Microsoft, and if I look at the Microsoft one-year chart, they're down 13.73%, right? So if Microsoft's down 13.73%, and they're paying a 1% dividend, I'm perfectly happy with having JEPQ. If it means that like I'm owning Microsoft stock and getting a higher dividend with basically the same decrease or a little more decrease, but again, I'm getting those dividend payouts. Apple's down 9.14% in the year. So again, similar situation. Like these tech stocks, a lot of them are way down, which makes sense why JEPQ would be also way down. And maybe bad timing on JEPQ's part to launch this thing while everything was like topped out. Like if I look at a 5-year chart at Apple, where's May of 22? Right here. So they not bought it at the exact high, but like kind of bought it at the high, and that for like everything. So it is a little brutal, but it sort of explains the pricing of the ETF, right? At least in my head, I can say, okay, well, it makes sense that JEPQ is down because everything that they have is down, but at least I'm getting those juicy dividends and I'm not getting totally crushed, right? That's how I look at it. I actually like JEPQ a lot. It's hard for me to say how much I like it because it hasn't really been around for a very long time. But now that we've gone over kind of what's in the portfolio and how the portfolio is moving currently, let's go over how this portfolio actually works. All right, so first we need to understand what an option is and we need to understand what covered calls are so we can better get a grasp of what's going on over at JEPQ. So, an option is really the option, right? Like literally just the choice to buy a stock or an ETF in the future at a preset price. So what does that look like in real world, right? Hey, I got this cell phone. It's worth $100. You also have somebody who wants to buy that cell phone and they think that it's going to be worth a lot more in the future because they heard from their uncle that Samsung's running out of chips to make cameras. What up, guy? I'll pay you $3 if you hold that phone for me until a month later, and I'll pay you $102 for it instead of $100. All right, so what just happened there is that these two guys just entered into a 1 month long options purchase contract. Okay? And basically, here's what happened. The first guy owns a phone. All right? The phone is worth $100. You can buy it retail for $100. It's $100, right? The guy has his phone. The second guy offered $3 and paid it to the first guy, right, for the potential to buy the phone later for $102, right? So who's out what at this point? The first guy who owns the phone has his $100 equity in his phone plus $3 of purchase option premium, right? So he sold this guy the option to buy his phone later. Great. He's got $103. The other guy has nothing. All right. So what happens in a month's time? Well, when it comes time at the close of this option, one of three things is going to happen. Either A, there's a big sale, the phone goes down in price, you can buy this phone anywhere for $90. All right. Well, clearly the guy is not going to want to pay $102 to buy the phone off the guy he gave the option premium to. He'd rather just go to Best Buy and buy it for $90. So how's the equity stack up at that point? The guy who paid the $3, he's out $3, right? You win some, you lose some. The other guy, he is down whatever his phone's value loss was, $10, but he made the options premium back. So, he made $3 and he still owns his phone. Okay. Option 2, right? Or potential outcome number 2 is, let's say the phone was worth $101. Okay. So the phone's worth $101. Exciting. Great. It went up in value. The guy was right. The semiconductor thing was real. He's paid me $3. He can buy it from me for $102, right? But he's probably going to just go to Best Buy and buy it for $101, right? He's still going to go buy it and save the money. It doesn't matter that he paid me for the contract. Why wouldn't he go buy it cheaper, right? You can buy it cheaper. Why wouldn't you? At that point, this is the best case scenario for the guy who is selling the phone. Not only did his phone go up in value by $1, so his phone's worth more now, his asset is worth more, but he also made $3 on the options premium because the guy who, if he wants to go buy the stock, he's going to buy it cheaper from somebody else. He's not going to buy it from me. That's ridiculous, right? So in that scenario, I've made the dollar in appreciation from holding the asset, the phone in this case, and I got paid $3 from the other guy. So now, what's the last outcome? The last outcome is, let's say the phone's worth $110, right? He was right. His uncle is a genie and knew the future, and the price of the phone skyrocketed, right? So at that point, the contract goes through. I sell, the first guy sells the phone for $102 after getting the premium for the contract for $3. The first guy still makes a profit of $5, but he doesn't have the asset anymore. So he sells the asset off. He makes $5. The other guy's sitting in $5 of equity, and now he controls this phone. But he, his initial upfront risk was only $3 to try to get it before the great, Samsung boom of 2023. None of that event, by the way, is real. That's all fictitious. I don't know anything about Samsung and their semiconductors, so yeah. But that's basically how options work. But what does that have to do with JEPQ? Well, selling these options is the core of JEPQ. So pretty much everything, right? Ultimately, when they say that their primary objective is securing growth stocks and selling covered call options out of the money, that means that they're doing exactly what the guy selling the phone was doing, right? They're selling the option to buy stocks in their portfolio higher than they currently are, okay? And this means they're hoping to secure as much of that premium as possible while seeing the stocks still rise, but not enough that it makes sense to go through with the purchase option, okay? So just like scenario 2 of what we were talking about, where the phone went from $100 to $101, it didn't make sense for the buyer to take the phone for $102, right? So we still see the growth in the value of the assets, right? And we get the income from selling the purchase contract, but without having to sell off the shares. That is what they intend to do. This also helps with volatility, right? Because again, remember scenario 1 of the phone example. If the price of a stock goes from $100 down to $95, right? We don't get hit as hard because we've already taken the money from the buyer for the purchase contract or the options contract. We have that money. So when the stock goes down, we lost some value in the stock. That's never great. But because we sold an out of the money option, right? We sold the stock in the future for more. We still hold all of our shares and we get that premium income from the option call contract, okay? That's how JEPQ is designed. Really, really a good design. We've seen it a lot through multiple funds, and this is the first time that I've seen a growth fund that is so focused on dividend paying technology stocks. For the most part, right? Not all of them are dividend paying, but for the most part, they're dividend paying technology stocks. I like that because as a dividend investor and an ETF investor, it's really hard to find a way to include some of these stocks like Google into your portfolio. I want the potential growth from Amazon in my portfolio. I want that. But they don't pay out. So maybe Amazon does. I don't really follow their stock. I don't think Google does, but they don't really match my portfolio. But if I can use their strength in a fund to sell covered call options on them and earn that income, that's awesome. Same thing with Tesla. I don't want to own Tesla stock. Do I wish I could catch some of the volatility when it goes up? Yeah, I do. I really do. And when it's dropping, can we make some income from selling those call options? Yes, I want that, which is great. I just don't want to deal with it. So that's where, something like JEPQ looks really, really good to me, and more of a long haul play. Companies like Microsoft, Apple, everyone's switching to artificial intelligence, and it's kind of like the new space race. Who can get the best AI to basically make the rest of the world useless? I want to own whoever does that. I want to own the company that is winning the AI race. So that's a pretty big deal. And I think that this gives you a lot of exposure to that market while still focusing on dividend income. So that's kind of, where we're at. I'm going to continue to watch JEPQ. right? We're going to continue to monitor. I'm excited for May when it's made a full year, but I know that like tomorrow they're paying out something like 44 cents a share, which is more than 1% return. And that's a monthly dividend payout, guys. It's like unbelievable. If you just reinvest that into, JEPQ, it looks, I have no reason to believe that it couldn't steamroll. And, so something that we're watching the portfolio. I'm pretty bullish on it. I like it a lot. Just like people are bullish on Tesla and Amazon and Google and Microsoft and Apple right now, I'm bullish on JEPQ. So pretty exciting. Thanks for watching this. I know it's been a long video. If you want to get into investing and you are new, feel free to join Sofi. There's a link down below in the description for new accounts. They give you $25 of free stock when you sign up with your first $10 or more. Great way to get some free stuff. That's almost a full share of JEPQ if that interests you. But yeah, so pretty cool to see there. And, as always, the motto of our channel is happiness, health, and wealth. So I wish that to all of you. And with that, roll the outro.